I've got to admit, everyone's got to admit it, okay? Things have been looking pretty damn grim in the markets, but zoom out with me. This could be a massive coil up for Bitcoin's next big move. The business cycle is broken. The 4-year cycle's a mess. Because guess what? If Bitcoin closes red this year, it breaks 4-year cycle, baby. But the picture says we're breaking upward. Give me 10 minutes before you ditch this market, okay? We got a lot to talk about. So let's make sure we're all on the same page. Let's discuss the business cycle first. It's sort of like the 4-year cycle for crypto. Most investors know, but it has been around for far longer, not exactly on an exact timeline. Instead of a strict 4-year time frame, it has basically 4 phases. You got the expansion phase, jobs are popping, businesses are cashing in, everyone's having a good time, money's flowing like a big fat party. Then comes the peak. That's the high point. Stock markets tend to peak at the exact same time the business cycle peaks out. Everyone's like, whoa, let's not crash yet. This is a great party. After that, contraction roll in, layoffs hit, profits dip, and it's a bit of a bummer. Finally, the trough is the chill zone, the low before we gear up again. Guess what? We're missing the expansion. Where's the expansion part been in this cycle? We haven't had it. We're still stuck in the damn trough. Usually the contraction sticks around for about a year before it bounces back. That's easy enough to understand. But throughout the years, several interpretations have come out. Now, check this one out. Posted by Tech Dev over on X. This caught my attention. It's very interesting. His chart concentrated on Bitcoin. Instead of looking at expansion, peak, contraction, trough, he defined the phases as bear, pre-parabolic, parabolic, and back to bear. Now, according to his chart here, we are still in the pre-parabolic stage since 2022 and 2023. Okay, there has not been a major breakout in risk in the crypto market. This has been the longest pre-parabolic stage ever. And get this, we are nearing its end. So it's either the beginning of the end, and the bear market's here, or it's the beginning of the beginning, and the next bull market's truly starting. You look at everything up until this point, it's just ETFs and sailor buying. Now, which if all this is true, it gives credence to the thesis that maybe this is an extended cycle that will get us well into 2026, particularly because the business cycle itself has flatlined for such a long time. Speaking of the business cycle, one of the most watched business signals is how the manufacturing sector is doing. Manufacturing contributes north of $2 trillion to the US GDP. It also employs 13 million workers as of August 2025. So you can bet a pretty penny that if manufacturing falters, it will send a ripple through the economy. The Institute of Supply Management Purchasing Managers Index, the ISM PMI, is a crucial monthly gauge of U.S. economic activity, and it's based on surveys of manufacturing purchasing managers. The ISM equally weights about 5 key components: new orders, production, employment, supplier deliveries, inventories. A reading above 50 indicates that there is growth in the manufacturing sector. Things are expanding. While a reading below 50 is the opposite. It signifies contraction. Honestly, this has not been doing so good recently. In fact, it's been below 50 since March. And it was barely above 50 for like a minute before it was back below it, okay? 2022, 2023 were pretty brutal for manufacturing as well. This means the U.S. manufacturing sector has been contracting for the last 8 months. You can partially blame the tariff drama to this, but also just the unwind of all the Biden-era policies. However, this analysis from Sminton over on X gives us a fresh perspective on what is happening. He analyzed the PMI's data set from 1948 to today, and he found out that we are in the longest running contraction for the manufacturing sector in history. Think about it. That's why this cycle's been so distorted. We are in a very strange phase right now. According to his research, the average contraction length is 1.1 years. The current is almost 3 years. Now, I have to clarify that this is broadly correct, but there have been a few months when the PMI was just a tick above 50. Those are kind of just fake outs. It's been below 50 for majority of the time over the last 3 years. But according to Sminton, we shouldn't panic just yet because what goes down eventually comes back up. Just science, guys. It's just science. And the chart actually backs them up here. Now, before we talk about why, I want to do a quick shout out to today's sponsor. If you like water, you need to listen to this one, okay? What is your relationship with water? You drink it, you buy it, you love it, okay? Life. But have you ever thought about benefiting from the water industry itself? It's a $1 trillion market, and Lake is finally opening the door. Lake is a real-world asset project transforming the global water sector through its blockchain ecosystem, the LAK3 token, the first universal cryptocurrency for water. Their Web3 services let anyone buy, own, trade, invest in, and monetize real spring water. Key products including their digital water, basically turning spring water into a secure tradable digital asset, DeFi income opportunities, a C2B model enabling large-scale water deals, and a new Web3 water shop using a spring-to-consumer model, and a launchpad for investing directly into water sources themselves. Lake connects users to premium springs worldwide, giving everyone access to the water economy. To learn more, head over to lak3.io, but also go check out their water shop and get yourself some awesome spring water. Portal.lak3.io. There's links for both of those down below. And thanks, of course, to the guys over at Lake for sponsoring this video. Back into this. Look, in this monthly chart, the orange line is Bitcoin. The green line is the ISM PMI, and the white 50 line marks the boundary between economic expansion and contraction. What stands out is the consistency. Every time the PMI dips below 50, Bitcoin is already in a bear market and coiling for its next parabolic run. And every major BTC peak has occurred when the PMI pushes above 60. It's currently under 50, and you're telling me the fucking market stopped out? Anyway, a 2024 Mind Growth article echoes this observation. Investment analyst Jeremy Fielder notes that the average cycle peak tends to fall between 60 and 65, a level that we have not even come close to reaching in many, many years. Here's the twist, okay? We've been stuck below 50 for an unusually long stretch of time this cycle, yet Bitcoin isn't in a classic bear market. In past cycles, sub 50 PMI readings lined up perfectly with BTC bottoming and coiling up for its next move. But price has been going up thanks to ETFs and Sailor. Well, the PMI has been under 50 for a lot of time. Bitcoin is grinding higher despite the contraction signal flashing nonstop. So just imagine what happens once the PMI finally breaks back above 50 or even pushes up towards that 60 level where every single previous Bitcoin peak has happened. Now, if BTC can rally like this in the economic contraction mode, think about the upside potential once the economy actually turns on again. It could be explosive. So here's the real takeaway. The market is not dying. It's loading. It's just taking a very, very long time to load, like downloading boobs in the 1990s over dial-up internet. You guys know what I'm talking about, right? Bitcoin's been pushing higher through the ugliest macro backdrop in decades, the longest PMI contraction in modern history, the aftermath of the longest government shutdown ever, a broken business cycle, recession signals everywhere, job market weakening, all that kind of stuff. The Fed has been addicted to quantitative tightening, but things are changing. QT's ending. QE could be starting sooner than people think. And yet, despite all the craziness, Bitcoin has refused to give up. That alone should tell you something. If BTC can grind upward in those kind of conditions while the entire economy is in flashing contraction mode, imagine the power once the switch flips. Same can be said for all these AI stocks, by the way. The stock market's done fantastic, while the manufacturing sector, which is a pretty reliable signal, has not. That switch, of course, that will help us go higher is liquidity QE, balance sheet adjustments, temporary liquidity operations, technical adjustments, whatever the hell you want to call them. It is coming, okay? The jobs market's saying that it's coming. The government is drowning in deficits, growth is rolling over, unemployment is ticking up, and the rate cuts are simply not enough. Jerome Powell has been too slow. The Fed will have to inject. But here's the kicker. We're not just waiting on the Fed. The Treasury General Account still holds a massive cash buildup from the shutdown. And the moment that Washington is fully operational again, the money floods straight into the system. Now, they're not going to flood $1 trillion straight in, but a couple $100 billion is going to make a difference. A mini liquidity wave before the Fed even moves. And while the U.S. hesitates, the rest of the world is already stepping on the gas here. Japan launching a massive $110 billion fiscal stimulus package. The Bank of Canada restarting routine treasury bill purchases, aka stealth quantitative easing. Global liquidity is swelling before the U.S. even joins in. And China as well, and other countries too. Put it all together, and the setup becomes absolutely insane. You see, Bitcoin not only survived the contraction phase of the ISM PMI, it thrived through the slowdown, holding strong while the PMI stayed stuck below 50 for almost 3 years. But that cannot last forever, okay? Maybe a few more months, and we'll see the breakout in the ISM PMI, which will start the clock to the end, but it'll take a year or so. If this is how Bitcoin behaves during a supposed contraction phase, imagine the blow-off once we move into an actual expansion phase for the manufacturing sector of the economy. The moment liquidity flips, the market doesn't just recover, it rips away the bandages, ditches the crutches, and throws a party. The question is, will you still be around when it happens? Can you survive? Can you be a multi-cycle cockroach who can get through any bullshit the market throws at you? By the way, If you want to know more about macros, zooming out, Bitcoin, all that kind of stuff, check out my free newsletter. There's a link down below. Go check it out. Thanks for watching.